Hello everyone. Grab a pen and a piece of paper. What I am about to go through are 5 State Pension and Department for Work and Pensions payments starting this July 2026 that a significant number of people watching this video right now are entitled to and are not receiving. This is not because they do not qualify and not because the money does not exist. It is because the DWP will never bring it up on their own. Go through this list and put a check mark next to the ones that apply to you. Some of you will find one, some of you will find 3 or 4. Any one of them could mean a higher weekly income for the rest of your life. Before we begin, I would like to remind you that many pensioners could be eligible for a new extra support payment of £200. If you have not heard about this yet, I have left detailed information from an official source in the comments below the video. Make sure to check it out. And now, let us move on to the topic of today's video. 1. Inherited Additional State Pension, SERPS. Payment number 1 is missed most often, even by people who have been on the state pension for years, but you can claim this starting July 2026. If your late spouse was on the old state pension system and reached state pension age before April 2016, you may be entitled to inherit a portion of the additional state pension they built up through SERPS, the State Earnings-Related Pension Scheme. This inherited amount adds money to your weekly pension permanently. The DWP is supposed to review this automatically when a death is reported. In practice, it does not always happen correctly, particularly in cases where the late spouse reached state pension age before March 17, 2008. For example, a woman in her early 70s in Yorkshire had been collecting her state pension for 7 years. Her husband had retired in 2003 with a full national insurance record and substantial SERPS built up. She assumed the DWP had handled everything correctly when he died. They had not. The inherited SERPS top-up had never been applied to her pension. When she rang the pension service and asked specifically whether her pension had been reviewed for inherited entitlement from her late husband's record, they opened a review. The correction added over £40 a week to her pension permanently. The backdated arrears arrived as a lump sum. If you are widowed and your late spouse reached state pension age before April 2016, ring the pension service on 080 731 0469. Ask specifically, has my pension been reviewed for inherited SERPS entitlement from my late spouse's record, and am I receiving the correct amount? Write those words down before you call. 2. State pension underpayments for women. Payment number 2 is specifically for women born before April 6, 1953, with the DWP processing updates starting July 2026. For decades, DWP computer systems failed to automatically apply pension uplifts that married women and widows were legally entitled to receive. Between January 2021 and March 2025, the DWP identified 130,948 underpayments totaling over £800 million. The average correction for married women has been around £5,500. For widows, it is over £11,000. Some women have received more than £40,000 in arrears. The DWP has confirmed it has completed the majority of automatic reviews and is now waiting for women to come forward themselves, particularly those whose husbands reached state pension age before March 17, 2008. The correction exercise runs until March 2027. After that, the window closes permanently. If you are a woman who reached state pension age before April 2016 and your pension is lower than expected, ring the pension service on 080 731 0469 and ask for a review. Do not wait for a letter. 3. National Insurance Record Errors Payment number 3 requires a specific check right now to correct your files for July 2026. The DWP calculates your state pension using the number of qualifying years on your national insurance record. Every qualifying year depends on earnings and contributions data reported by your employers, going back to the 1970s and 1980s. If an employer made an error, used the wrong national insurance number, or went out of business before correctly filing your payroll records, those years may show as not full on your record. The DWP will not flag this for you. They calculate your pension using whatever is in the file. Log into your personal tax account on gov.uk and find your national insurance record. Look for any year marked as not full, where you know you were working and earning above the national insurance threshold. Each incorrectly recorded year reduces your weekly state pension by approximately £6.89 permanently. A man in Birmingham did this check at 64, 2 years before he planned to claim. He found 4 years in the late 1980s showing as gaps, years when he had worked at a manufacturing company that subsequently closed. He tracked down his old P60, contacted HMRC's National Insurance Contributions Office on 03020 with the documentation, and the record was corrected. When he claimed his state pension, his weekly payment was £27.56 higher than it would have been, which is over £1,430 more every year for the rest of his life. 4. Backdating and deferral options. Payment number 4 is for anyone who has reached state pension age but has not yet claimed, and you can submit this request in July 2026. When you claim your state pension, you're allowed to request backdating of up to 12 months. You do not need to explain why you did not claim earlier. You simply ask when you call. The DWP then pays every week of state pension you were entitled to, going back up to a full year as a lump sum with your first regular payment. On the full new state pension of £241.30 a week, 12 months of backdated payments is over £12,500, arriving in a single payment. The DWP will not mention this option. You have to ask within 12 months of reaching your state pension age, because after that, those payments are gone permanently. There is also a second option. Every week you defer past state pension age adds to your eventual weekly amount. For every 9 weeks you defer, your weekly pension increases by 1% permanently. Defer for a full year, and your pension is around 5.8% higher for life. On £241.30 a week, 1 year of deferral adds approximately £14 a week permanently, over £728 more every year. The DWP will not ring to explain either option. When you call to claim, ring the pension service on 0807 317 898. Say specifically that you want to discuss backdating to the earliest possible date, or ask them to confirm exactly what your weekly amount would be if you deferred for a specific period. 5. Carer's Allowance and the Carer Addition. Payment number 5 is for anyone currently caring for a sick or disabled partner, with new processing terms applicable from July 2026. Carer's Allowance pays £86.45 a week for people who provide at least 35 hours of care per week to someone receiving a qualifying benefit like attendance allowance. Most pensioners assume they cannot claim it because their state pension is higher and they have been told the two payments cannot both be paid. Here is how it works. When you apply for Carer's Allowance and the DWP determines that your state pension is higher and cannot be paid alongside it, they confirm what is called underlying entitlement. This is a legal status saying you meet all the criteria. That confirmation letter unlocks a separate payment called the Carer Addition, added to your pension credit. The Carer Addition is £48.15 a week, over £2,500 a year. People who never apply because they assume there is no point never receive that letter. Without the letter, the £2,500 never arrives. A woman in her late 60s in Manchester had been caring for her husband for over 4 years. She had looked into Carer's Allowance and been told her pension was too high. She accepted that and never applied. When her daughter mentioned the underlying entitlement route, she applied, received the confirmation letter and contacted the pension credit team. the carer addition was applied. Over 4 years of missed payments, the backdated lump sum was over £5,000. Her weekly income increased by £48.15 from that point permanently. Ring 080 731 0297 to start the Carers Allowance application. When you receive the response, ring the Pension Credit Team on 080 991 234 and tell them you have received a Carers Allowance decision confirming underlying entitlement and ask for the carer addition to be applied. Action Checklist. Here is your checklist for July 2026. Are you widowed? And was your late spouse on the old state pension who reached pension age before 2016? Ring 080 731 0469 and ask whether inherited SERPS entitlement has been applied. Are you a woman who reached state pension age before April 2016 and your pension has always seemed lower than expected? Ring 080 731 0469 and ask for a review before March 2027. Log in to your personal tax account on gov.uk and check your national insurance record year by year. Any year marked as not full, where you know you were working, is money you can recover by ringing HMRC on 0302 0350 with your P60. Have you reached state pension age and not yet claimed? Ring 0807 317 898 and ask specifically about backdating to the earliest possible date. Are you caring for a partner who receives attendance allowance? Apply for Carers Allowance on 0807 310297. Receive the underlying entitlement confirmation and then ring Pension Credit on 08099 1234 to unlock the carer addition. Every one of these payments, starting this July 2026, requires you to ask. Not one of them will arrive because the DWP noticed you qualified. Subscribe. Share this with someone you know who is on the state pension. I will see you in the next video.